Joining me now is Sheila Bair, former FDIC chair, and I did not know this, but you're on the board of Paxos, the stablecoin issuer. Welcome, Sheila.
I am. Yes, thank you. Thanks for having me.
I should mention you're also the author of a series of children's books on crypto. No, I'm kidding. It's on financial literacy, but maybe crypto is now part of that. Money Tales, there they are. So,
well, thank you for mentioning them. Yeah,
exactly. We're showing them all on the screen. So let's start with what the FDIC wants to bring into the regulatory framework. Are they going to move before the stablecoin issue is clarified or after?
I don't think so. I went back and read her speech and the interview again. Didn't completely line up. I think what she was so good that they're going to be trying to clarify all this because it's a big muddle right now. But I think these are areas where they're seeking to provide clarification. I don't think they've quite gone so far as to say, yes, it's going to be okay for banks to hold crypto on their balance sheets. But that is one of the issues they want to clarify and provide an answer for.
You know, I think the banks are sitting there and going, well, wait a minute. We have enormous growth in fintech and these crypto platforms and all of this. You know, our users, the community, they want to use these services, but they obviously want to do so in a regulated way. And we don't want to be disintermediated. What was the answer there?
Right. Well, the technology is probably going to disintermediate them. I don't know if that's a bad thing. I think, it's look, I mean, if it happens, it happens. It should be part, if it's a better mousetrap, it's a better, more efficient, lower cost to customers and businesses, then that's what's going to happen. But look, I think if you're a regulated bank, if you're an FDIC insured bank, you get certain benefits from that. You get deposit insurance, you get access to the Federal Reserve. And with that, those benefits, that government safety net, comes an obligation to operate in a safe and sound manner. So I think parts of this business can appropriately be in banks. For instance, custody, where your customer is keeping the market risk. These are highly volatile speculative assets. That's fine, but actually holding them on balance sheet, making markets in them, they're very volatile, very risky. And there are a lot of things that we say really are just too risky and inappropriate for a bank, which is expected to operate in a safe and sound manner. And, there's a lot of things that go on, stupid things that go on outside of banks that are not regulated, and people lose money all the time. And if they understand the risk, fine. That's how capitalism works. But it doesn't mean everything has to be in a bank.
Would I be correctly describing your view as saying it's okay for banks to touch crypto activity as long as they are not holding their own cash and capital in the form of cryptocurrencies?
I think that's right. I don't think, and certainly market making should be done in a separate affiliate. It shouldn't be in the insured bank. And that's what we do for securities market making now. It's not done in insured banks. So, I think you need to think hard for, regular everyday, people, our deposits, our FDIC insured deposits. What are appropriate uses of those? And holding them in Bitcoin or Dogecoin or whatever, the fad may be and the elevated valuation might be. No, I don't think that's the right use of FDIC insured deposits.
So let's talk. So Paxos and some of the stablecoin companies have tried to say what makes us different is that we have, clear assets which back the value of our stablecoin. They can issue sort of their own documentation attesting to that and that sort of thing. Right. But regulators, when we talked to Gary Gordon the other day, he made it sound like they should still come down really hard on stablecoins, broadly speaking. So are they going to go with the money market mutual fund framework or, treat them like how do you think they end up kind of being defined within the financial system?
Well, I think they are the closest thing to a government, or should be close to a government money market fund, in the sense that they represent their stable value, dollar in, dollar out. So they should be in highly liquid, federally backed short-term securities, which is basically what Paxos does and what Coinbase does now, too. Tether's out there, and nobody's quite sure what they may be invested in. But I think that's best practice now, and it would be a very small leap to create a structure like a government money market fund that these stablecoin issuers could operate under. I think that would be positive. That is much closer to what the current model is in best practice versus trying to force it into a bank, where then you've really got the FDIC, treat the stablecoins as deposits, you got the FDIC providing stability. Then a bank could take those reserves and lend them wherever. Banks do silly things with their money, as we saw during the subprime crisis. So it's not clear to me shoving it into a bank makes sense. I think making it akin to a government money market fund makes a lot of sense. Yes. And that's very close to best practice now.